with overall neutral to bullish movement developing a more gradual uptrend. A larger Fibonacci spiral with a wider arc towards the right side turns out to be a suitable choice, with a less common positioning where the start and end point are based on the entire length of a trend, and points diagonally due to being placed on the highs and lows of these reversal points. Using the lowest candle down here produces similar results with more medium to short term context. These are common and more realistic results where we won't get the exact peak intersecting with a spiral. Intersecting with approximate areas of congestion is much more common for most of these spiral variations based around this first upward reversal that began the larger uptrend. Pointing down on the first portion of the uptrend produces a highly valid spiral which achieves the same desired wide arc. And as a bonus, it intersects with several past clear reversal points and follows the approximate curvature of the previous downtrend. Such features are much less common, but when they do occur, you could get improved results. Due to the abundance of clear swing points and more decisive price movement, there are plenty of options which can produce similar results. When using the first downswing in this uptrend, there's this flatter reversal area which began the downswing. Using one of the last or first highs makes less of a difference since it's a small area. Then with a previous and sharper downswing, using the entire length of this bearish reversal, is a fairly long distance between the start and end point. But in terms of the time range, it's a short duration and the spiral won't be exceedingly large. Similar to other spirals before, it captures that approximate area where price begins to slow down just before the sharp peak. The final portion of this downtrend just barely qualifies as a proper swing point. At first, this orientation produces a spiral that's much too wide. Instead, we can flip it around for more preferred medium to short-term coverage. With an early downtrend in progress, we can easily reference the peak candle to produce a spiral suitable for the neutral to bearish context. We get that preferred characteristic where it arcs over to the left to intersect with some noteworthy features, which in this case is that downtrend we looked at previously. As time moves along and price drops, the natural curvature of this spiral orientation is likely to arc over towards the bottom right corner and eventually intersect with price at an area of interest. Since this is the context of a downtrend, the area of interest is likely to produce opposition to the downtrend, meaning neutral to bullish movement. Flipping the spiral to point up produces shorter-term coverage that goes less towards the bottom right corner, though it's still valid and captures one of those shorter-term swing points. And incredibly, even after almost a year, the spiral's outer portions manage to capture an area of interest where the long-term downtrend begins to shift towards more pronounced bullish movement. Similar to the previous downswing we looked at near the beginning of 2022, we can use this first downswing that began the larger downtrend to produce a long-term spiral to try and find areas of interest where there could be major opposition to this developing downtrend. And in fact, it does arc down for contact with that approximate area where there was a shift towards more neutral to bullish movement. Naturally, it's quite a wide area given the large downtrend and the broad reversal range. Using the area in between two spirals can help narrow down the search. Due to the suitable conditions of fast, clear swing points and the decisive long-term downtrend, variations of Fibonacci spirals at the top of the downtrend achieve similar results in arcing down to the bottom right corner where this current bullish reversal range is forming. Focusing on the lowest upswing point, a bullish perspective would aim to have these spirals arc up to the top right corner, which allows for this less common variation, with pointers crossing and converging to form that familiar V shape with the lowest upswing point. As price moves up and the arcs begin to move down, there is eventual contact with the first smaller spiral, and it's good to see those secondary characteristics where on the left side, these spirals intersect with clear past reversal areas. Right when there's contact with the spiral, there is opposition to the current uptrend, meaning the area of interest is defined as a neutral to bearish area that extends until the area of approximate contact with the next spiral. And the reason why this orientation was not chosen was because it produced proportions and placements for these spirals that were too small close to the center to extend out and be useful towards 2023 when the uptrend continued higher, and the outer portions were much too wide to realistically be contacted anytime soon to be relevant with the uptrend, which wasn't particularly steep unlike some other examples we saw previously. Familiar positioning like this produces better results, but there's still an issue with the first spiral being too large due to it pointing towards the top right corner and running the length of a slightly longer upswing. The same thing happens with the second spiral when we change the position to a similarly sized upswing, resulting in an arc that goes in the desired direction of the top right corner but is much too wide for use with a slower and more medium-term uptrend. This trend provides a good opportunity to show how forming a trend line with a pointer can be done with more than one Fibonacci spiral, especially when the trend is so stable the two pointers can be aligned with each other. The great results are helped by close adherence to the trend line when a larger retracement bounces off it. Pointing a spiral up and based on the lowest reversal candle produces a spiral close to the same size as a spiral with a much longer length between the start and end point that extends up to the final downswing of the previous downtrend. This means it's fairly short-term coverage that is in the desired direction of the top right corner, and at that area of interest between the two spirals. There is certainly neutral to bearish movement in this shorter time frame to oppose the uptrend, but ultimately in the broader context, it's just a delay in the ongoing uptrend. And again, there are similar results when extending the second spiral up to the approximate height of the previous downswing. And right when November begins, there's contact with a larger spiral, except this area of interest is defined by the start of a bullish continuation, which is less common, but we've seen it before. We know there can be an important event for the uptrend at that approximate time with intersection between price and the spiral. This combination is less common in combining the diagonal length of a minor reversal that shares the low price of a single candle, which is the basis for a vertically positioned Fibonacci spiral. And a slight alteration is to extend up to the height of the previous downtrend. The end result is desired medium-term coverage towards the top right corner that is suitable for this moderately paced medium-term uptrend. When we look back, we can see those secondary characteristics where clear past reversal areas are contacted by the spirals. The end result narrows down an area of interest for the uptrend, quite similar to some of the other more successful spiral variations.